Hello, everyone, and welcome to the Goldshore Resources live corporate webinar. This is David Vidala from RBMG. Goldshore is listed on the TSX Venture Exchange under the symbol GSHR and on the OTC under the symbol GSHRF. Joining us today is the company's Director and CEO, Brett Richards, who will be going through Goldshore's September investor presentation. This will include an overview of current operations, recent achievements, and upcoming milestones. At the end of the presentation, we will open it up for questions for management to address. If you are interested in asking a question and are logged into the Zoom app or web platform, you can submit your questions to us directly in the question module. Please note, this presentation is being recorded today, Thursday, September 23rd, and will soon be made available on the company's website. Today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. Goldshore Resources has a full disclaimer on page 2 of their presentation. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. And now I'll hand it off to Brett. Brett, the stage is yours.
Thanks, David, and thanks everyone for taking the time to listen today to our overview. I do direct you to our website and to page 2 of our presentation on our website for our disclaimer and our forward-looking statements, which David alluded to earlier. For those of you who are not familiar with Goldshore, we are a fairly new company. Through a series of transactions I'll speak to soon, we were approved on May 31st of this year for trading and admission to the TSXV. And we started trading on June the 4th. So we're a very new company. However, the asset is very mature and it's very developed. The key highlights to the story is that Goldshore acquired the Moss Lake Gold Mine project from Wesdome Gold Mines back in January of this year. Concurrent to that, we raised $25 million financing in February of this year. And those transactions went for approval to the TSX. They were reversed into a shell. And all of the transactions were approved on May 31st. And we started trading on June the 4th. The Moss Lake Gold Mine project is in a very low-risk jurisdiction in Ontario. It's a very mature district. The 200 million ounces have come out of the Red Lake district, the Timmins Camp, and the Abitibi Belt in northern Quebec. So it's very mature when it comes to gold production. The project we have has substantial exploration upside. And my view that we are going to take the time over the next 12 to 18 months to realize that exploration upside. The project itself has 4 million ounces of historical resource, but it's along a 20-kilometer mineral trend. The actual resource representing less than 10% of that trend. But the 20-kilometer mineral trend is mineralized. It has drill results on it, and I'll speak to them shortly. So back in January, when we formed the company, we raised a bit of money, and we started to come up with what our strategy is. And our strategy is to take the Moss Lake Gold Mine project to the next level. We're not starting at A, and we want to take this project to the end of the alphabet. We're starting at L. We have 4 million ounces, which is substantial in this sector. But we have 4 million ounces, and our job is to increase the quality of it and the quantity of it. So we put together a 100,000-meter drill program and a comprehensive approach to exploration, starting with a geophysical survey and then using that information and that data to create quality drill targets so we can have excellent results from our drill targets. The next real takeaway is the team that we formed and the board that we have. And I'm going to very quickly fast forward to the back of the presentation where we have some of the names of these people. So I've been in this business over 34 years. I've worked for majors. I've started a major company called Katanga Mining in the DRC. I've run companies on the London Stock Exchange, the London AIM Exchange, the Norway Exchange, the Toronto Main Board, and the Toronto Venture Exchange. I know gold, I know copper, I know this sector quite well, both from a business development standpoint, but also an operations and exploration standpoint. My senior VP of exploration is a guy by the name of Pete Flindell. Pete and I have been together for the last almost 20 years and on the last 7 or 8 projects. But Pete also cut his teeth on a major company called Newmont. And we were brought together in kind of around 2007 with a company called Avocet. But our board consists of CEOs of junior mining and mid-tier mining companies in their own right. And I'll refer to our website to go through our board and our advisory board. But this is a significant group of people who have the experience, the track record, and the delivery of projects. Our strategic advisory board continues with that depth. Led by David Garofalo, Craig Perry, Brian Sluserchuk. These are names in our sector that are predominantly at the forefront. They're all very successful in their own right. And, I've had questions where people have said, why so large? Why is the board so large and the advisory board so large? Why is it so large, Brett? And the reason I say that is we have a collective group of people who are very aligned. We all wrote checks to get into this company and some very big checks to get into this company. We all believe in this project and we all believe in the macroeconomic outlook of gold, which leverages this project immensely. So we use our collective network. We get the awareness out there. So this management team and this board is very, very hands-on. And the last takeaway is really the historic PEA from 2013 that Moss Lake Gold Mines did as Wesdome was earning into the project. And back in 2013, they ran the base case at $1,546 gold price. And the economics are I would say, interesting at that stage. There were $353 million NPV pre-tax and a 17% IRR. And that's back in 2013 with a $1,500 gold price. If I sensitize that up to today's gold price, if I take the 4 million ounces, I take the project that they put together and sensitize that to $1,700 gold, US dollar gold today, and increase the CapEx and OpEx with normal inflationary numbers for the 8-year period, I get an NPV pre-tax of $1 billion and a 32% IRR. And that's our starting point. So we are going to build on that. We are going to build the resource up from that, and we are going to put a proper project together. Where we are just west of Thunder Bay, Ontario, about 130 kilometers. But as you can see, we are in this Red Lake, Timmins, Abitibi belt along the top of northern Ontario. But the real takeaway here is what Moss Lake is and what it's starting to look like and what it's starting to become is something along the lines of some other large gold mining companies that were developed as we are doing and advancing that development towards actual production and a construction decision. But these are all very low grade, high tonnage, big volume type operations. Detour is a very good example. We are where Detour was 8 years ago, sitting at around 4 million ounces, looking to kind of double the resource through an exploration program. And Detour, where they are today, they are a major producer. They were acquired by Kirkland Lake Gold. They're a major producer, but the deposition is very similar. It's around a gram. They have 15 million ounces of resource and another 15 million ounces of reserve and 15 million ounces of resource. So they have substantially increased the size of their resource statement, but they produce about 500,000 ounces a year. So I see us walking in the footsteps of companies like that, companies like Cote Lake that IAM Gold acquired several years ago. To look at the history of Moss Lake, you can go back into the late 1800s, but I think a meaningful part of this was when gold and copper started to kind of move laterally. And in the 70s, there was a lot of exploration done by Falconbridge, which led to a joint venture between Tandem and Storeman to create the Moss Lake exploration program in the mid-80s, which was taken over by Moss Lake Gold Mines with additional drilling in the 1990s. But in this period, a land was acquired by Moss Lake Gold Mines that held a historic copper mine called North Coldstream, run by Xstrata before it closed down, ran for 12 years. So we have, when I talk about our land package, we have a substantial area that Moss Lake is in the middle of, but we have these collars on either end that we have different styles of depositions, and we have different different geology. This is our historical mineral resource statement. And looking at our map, we are just south of Highway 11. Our land package is one of the most extensive in northwestern Ontario for a mining company. We have about 40 kilometers toe to toe, and we are about 1 kilometer off Highway 11, which is Yonge Street in Toronto, which is the longest street in the world. So we have access to water, road, rail, infrastructure, power, skills, and we're near a major city in Thunder Bay. So we have all the makings of what it takes to tick the boxes of a mining company going into construction and eventually going into production. The takeaway here is there are 3 types of depositions on this kind of diagonal land package. Hamlin Lake in the southwest is a IOCG style deposit, iron ore, copper, gold. And that's what it is looking like through the work that we've done, the data compilation, the geophysics that we've done. And in the northeast, where the old North Coldstream mine was, where they produced a copper gold concentrate for several years, there also looks to be a different style, more of a VMS style, a volcanic massive sulfide style deposit up in that area. And in between, we have this large 20-kilometer strike called Moss Lake, and where the Moss Lake deposit is. And it's more of a shear zone hosted style deposit with a lot of disseminated gold, contained within this historic resource, but a lot of potential to understand that even better. As we get through our drill program, you heard earlier about putting together a 100,000 meter program, which I'll speak to more shortly. I don't expect to see anything more than what we historically that has been delivered. We're not going to see 20 or 30 or 50 grams over 2 meters or 5 meters. We're going to see 1 gram to 2 grams over long intercepts, 200 meters, 250 meters, maybe longer. But that is what we're going to expect going forward. And the historic data supports that. The geophysic data supports that. And we're a few holes into our program at Moss Lake. And we will be getting drill results out within the next 2 weeks, the first drill results, to validate kind of what it is we suspect. Up at Iris Lake, which is in the Coldstream area, there again a different style of deposition. You would expect different intercepts. You'll see, 11.4 grams over 7-8 meters. And 250 grams over a half a meter. Again, some very, very different mineralization relative to the style of deposition that's up there. And there is also copper up in this area as well. Coldstream, we can see it. And down in Hamlin Lake, again, about a gram plus a 0.35% copper kicker, but over 150 meters. So really long intercepts with some very, very decent grade. So I would expect to see more of this. We need to validate this and build on it. I think the other takeaway from this slide is quite simple. Early on in the 80s and 90s, when they were doing the drilling, and into the 2000s, right up to 2016, they only ever assayed Moss Lake for gold, and they only ever assayed Coldstream for copper and gold. We're going to be doing multi-element assaying to get as much bang for our byproduct buck, for lack of a better analogy. So we're going to assay for gold. We're going to assay for silver. We're going to assay for copper. We're going to assay for moly. And I suspect up in the VMS style deposits, we're going to see all of that. In the Moss Lake style deposit, we're going to see gold. Obviously, we're probably going to see some silver, and we may even see some copper, although it's not deleterious to metallurgical processing. One of the things that attracted me to Moss Lake and working in this space for 35 years, both listed companies and private equity, and I have a large portfolio of gold mining companies. I saw Moss Lake as something that had size and scale. Size and scale really does mean, I'm not going to say everything, metallurgy, grade, all these things are all also very important. But when you can have a stable deposition, a deposit that has legs to it, that can grow laterally at depth and along strike, which Moss Lake does, I'm interested in that. And that's why I was interested in this project. It was under drilled. It's only drilled down 280, 300 meters. And there are extensions, and we are seeing that now, that the deposit goes much deeper. It actually goes much wider and actually goes much more, I'll say, laterally. So there's a lot of growth potential here as we get through our program. One of the other things I also do, and Pete and I are approaching this very systematically from an exploration standpoint, but I'm approaching this as a project. And we're not just going to put 10 million ounces on our statement and wave our arms and say, hey, let's go, find a suitor at the end of the day. We want to deliver a real project that has, yes, real ounces, real size and growth potential beyond what our project looks like. But we also need to de-risk the project. And metallurgical testing is one of those things that is taboo to junior mining companies because they can sterilize a project. I think in our case, it's actually going to make the economics. And I talk about this $1 billion pre-tax NPV at the existing resource. We can instantly get 10 or 15% more metallurgical recovery through a cyanide circuit, because the historic numbers used were a range of 80 to 85%. And with less than 2% of the gold locked up, I see an instant 10 or 15% bang to our NPV of our when we update our PEA right off the top from conducting this work. So I see this as value creative, not value destroying or value eroding. When we embarked on all this, we said we need to take a comprehensive approach, an approach the majors would take to this, because ultimately we don't want to be in a position where, if we want to be transactional down the road, somebody's going to look at our data and say, hey, forget about that. We like the deposit, but we're not giving you, we're going to start over. Well, we did start over, and we started over with a VTEM survey over our entire property. And this is exactly what one of the majors, whether that's Barrick or whoever, any of the big mid-tiers and majors would take this approach. And we've cut our teeth with majors. We know the quality of data that's going to be required in order to get them excited. It all starts with here. Some of the early mag results we received were quite compelling, and we still have a lot of 3D modeling to be received from Geotech and Technoimaging, who did this work for us. But two things became very prevalent. Pete predicted early on that Moss Lake was sitting on a shear zone, and it is. And we can detail that through the early mags, the early mag highs and mag lows here. But the extent to where we can grow Moss Lake wasn't as well known as we can see through the first kind of, for the first magnetics. And it really looks like we can grow Moss Lake to the northwest substantially, and along strike, and obviously at depth. So that is one solid takeaway that we are going to focus on with our 100,000 meter program. So these types of maps give us good targeting, and they actually get more specific than this. They go down to kind of 50 meters, and we can get really, really good targeting with the maps that are, and 3D models that are to come. But what this also illustrated was these high-grade copper prospects that they lie on a major terrain boundary that delineates our whole land package. And you can see the mag highs up at Coldstream and the mag highs down at Hamlin, and on this diagram. And it really, really does illustrate that we may have to increase the priority of testing these targets because they are meaningful. And what does that mean at the end of the day? It means that if we can get these tested, we know we have a resource at Coldstream. If we can get these tested, there's copper optionality for this company down the road. Can we spin out a copper company because we have a meaningful resource that we need to build on, and raise money, and the Goldshore shareholders benefit from that? It's speculative, but speculative because we need to get through a program to demonstrate that. But it can be a reality. And looking at the early steps of this and the history of this property, it's not not a very big stretch to say that, you know, we have some very, very awesome copper prospects on our property that need to be tested. When I look at the speed of, you know, of what we've done in a very short period of time, we just started trading in June. We've only been trading for about 3 months, 3.5 months so far. So we had to build a lot of infrastructure on the ground. And I started there in January on the ground with Pete. We moved into Thunder Bay, and we have built the infrastructure. We have built the team of senior geologists, junior geologists. We have built the geotech team. We have built a core shack that can handle 400 meters of logging a day. We do core photography, we do petrography, we do bulk density sampling. We are ready to go. We have 1 rig running right now. We're ramping up to 2 in about a week's time, and we're going to get to 4 rigs by November. So we are ready for that capacity buildup. We're ready to receive all of that. It all goes into a common database. We don't skip a beat. We don't rack core and assay it later. We get full value from the results of everything we're drilling, and we're ready to go at 400 meters a day. Since we put this strategy together, we've hit all our targets when it comes to our permitting, our target generation, our drilling, and the work that has gone on to provide the infrastructure to allow for that. And I suspect come this time next year, we're going to have another discussion. And that discussion is we're going to be well through our 100,000 meters. We're going to be updating our resource estimate. Our mineral resource statement will get updated, and we will update the PEA, of which I've already said, you know, if you sensitize it to today's numbers, we're looking at a $1 billion NPV pre-tax at $1,700 gold. You know, companies like ours trade at 0.3 times NPV at this stage of development. That's a $300 million market cap that we should be trading at today. And we're trading at a $63 million market cap. So a lot of potential to get into Goldshore, realize that value upswing relative to where we are with our project development. And I'll say that's a project development re-rating or recalibration to the economics that we will deliver. And keep in mind, that $1 billion NPV is on the 4 million ounces we have today, historical resource, not on what we're going to build on, not the additional quality of ounces or quantity of ounces we're going to put onto our statement with this 100,000 meter program. It's on what it is today. So lots of significant upside. But I'm going to be frank with everybody. You know, I've built mines around the world. I've run mines around the world, and I've run mining companies with multiple assets. The market is not going to want to see Goldshore and Brett try and raise $1 billion, because we're talking north of $1 billion CapEx for a project of this size and magnitude. We're talking about kind of a 2-3 year permitting and construction project. This is quite large. They're not going to allow us to do it. They're going to a single asset junior mining company. The market is going to want to see a mid-tier come in or a major come in. And I am not and if anybody knows me, I am not a lifestyle CEO. And my experience in working with private equity, I am here to make my shareholders money. I am very cognizant of speed to market. So our job is compress this time frame, compress this Gantt chart as much as possible, create as much value, create as much awareness, create as much a stir about Goldshore, but real stir, substantive stir, because it is a real project, and create that in as short a period of time as possible. And then there will be a time, market willing, there will be a time when we will look to have a dance partner, to look to bring somebody in to partner with us to take the project forward. Because the next steps are PFS and feasibility study, which could take about a year before getting into project financing. So we would look to partner with somebody that the market is going to accept and the market is going to look for doing this. I was just at Beaver Creek in the Denver Gold Show. I heard Mark Bristow, who's the CEO of Barrick, speak. I heard Paul Rawlinson of Kinross speak, and Kinross being my alma mater. These guys both had clear messages to the market. Paul Rawlinson said, I run one of the largest gold mining companies in Canada, and we don't have any Canadian assets. So we're going to be focused on low risk jurisdiction. We're going to be focused on Canada, and we need projects that move the needle for Kinross. This Goldshore project can move the needle for Kinross. Mark Bristow said, we want to take a less riskier approach. We have our risk jurisdiction in jurisdictions like Papua New Guinea and the DRC and other parts of Africa when Randgold merged with Barrick. And yes, we have a lot of tier one jurisdictions as well. We want to increase our tier one jurisdictions, and we want to increase our exposure in Canada to large scale projects. Goldshore ticks that box for them. So timing willing, results driven, gold price driven as well. We are going to be in a very good place in 12 to 18 months time from today in order to be able, we are preparing Goldshore for that off ramp. And I'm preparing that Goldshore off ramp for our shareholders so they can have a liquidity event and realize all the value that we're trying to create here. And that is, in my view, that is the best way to get through a program like this and have a realization of that value rather than just say, we're going to drift along for 5 years. Because in my view, as you drift along, you just destroy value. This is an overview of our 100,000 meter program we'll get through by this time next year. And yes, we put some additional drilling in here because we may need to start working on the PFS. We may need to do some geotech drilling or some water drilling, watershed drilling. We may need to do some metallurgical test work drilling. And quite frankly, I want to bring these copper targets up as soon as possible so we can look at what optionality we have with these copper projects. One of the other things I'm very serious about and very, again, looking at putting a quality project together that is marketable to the right audience at the end of the day. I took our First Nations engagement and consultation obligation to another level. And Pete has established substantial relationships with all our First Nations host communities. And we look to move forward towards agreements with each of them, because I see this as not only crucial. This is having good relationships with your host communities is not a nice to have. It is an absolute need to have. And we're trying to de-risk the project as much as possible by this engagement. The second thing is we're conducting an environmental baseline study because yes, it'll cost us a few $100,000, but we will get that return back in multiples of that investment, simply because we will probably compress the speed to permitting and to a construction decision by over a year. Now, if you bring cash flows forward on a project of this nature by a year, you're easily going to bring forward $50 to $100 million of NPV. And if you do that, this is a great investment. So the majors will see this. Hey, we will have to do this. They've started it. We'll continue on with it. And they've just made our construction decision sooner. There's value in that. But the real takeaway today is this. We're an early stage company. We've just started trading 3 months out of the gate. The summertime was a little volatile for the gold price. It pulled back a bit. Goldshore pulled back a bit from its IPO at 65 cents. And this is the market that we're in today. We're in a bit of a funk with Evergrande today. The markets are a little unsure of which way they're going to go. Gold's a little unsure of which way it's going to go. But I believe in one thing. We are in a gold environment, a trading environment where gold is going to trade between $1,800 and $2,200 for the foreseeable future. And it's going to trade there because if you look at the macroeconomic view of where we are today with easing, with the pandemic and the global impact that has had on economies, re-engaging those economies to get back to kind of the new normal, and the impact that inflation is having throughout this. And if you think that inflation's not real, look at what you paid for a tank of gas a year and a half ago to where you are today. Look at what you paid for that 2x4 of lumber a year and a half ago to where you are today. They are multiples in lumber, for example, multiples of where they are. Inflation is real, it's here. And quite frankly, this is an environment that is starting to set up very, very well for the I'll say the gold price trading range. And I'm very conservative when I say $1,800 to $2,200. There are those who say it is going way beyond that. This project has size and scale. I call it leverage to the gold price because of its size and scale. So every $100 in the gold price, the NPV economics of this are going to increase by 150 or $200 million for every $100 of gold price increase. And that all aside, where are we today relative to our peers? And looking at this, we're trading at around $15 an ounce today, which is the bottom of the fourth quartile of our peer group, which has been put together by a bank. And the banks have said, hey, here's a group of 12 companies. They're all around kind of the same stage of development, PEA, looking to redo a PEA. They're going into a PFS, and they all have a minimum of 2 million ounces of a resource. Some have more, and they're all various stages of this, what we call the development stage. And they're all trading on a per ounce basis very differently. The mean of this peer group is $50. We have a 3 times to just get to the mean of our peer group. And I think the Moss Lake project is as good or better than 80% of the projects on this list, and I've looked at them. So I see substantial upside, not only to what I have talked about, the economics of this project, the quantum of what we're going to kind of produce, and the project we're going to produce. This $15, $15 trading comparable is on the 4 million ounce historic resource. And if we increase that, this number is actually, it should get way, way better. And so I see a lot of potential upside to getting into Goldshore now and watching this get through its motions, executing on its deliverables over the next 12 to 18 months. So where we're positioned today, I don't lose any sleep over this. I was in the market buying last week and the week before because it's a great entry opportunity. Lots of insiders of Goldshore have been buying over the last month. I see this as a great opportunity to get in today. When I look at other open pit projects in Canada, and I talked about Detour, they all look the same and feel the same as what Moss Lake does. They're about 1 gram. They're low grade, and they are high tonnage, and they are in a tier 1 jurisdiction, low risk jurisdiction. But these companies transacted for multiples of where we are today. Obviously Detour is a bit of an outlier, a $3.5 billion transaction, but something like Cote Lake, where it transacted for $700 or $800 million. Now that's meaningful. That's a meaningful jump and a meaningful increase to where we are, where Trelawney was acquired by IAMGOLD and Cote by Sumitomo, and they folded in. This is $80 an ounce, and this is a significant increase from where we are today. So, I just see that as opportunity. I see the downside as always being there. The downside is always there in the market. The downside is always there in the gold price. I'm mitigating the technical, geological downside by doing the work we're doing, but the upside is quite compelling. Another takeaway for everyone is our cap structure. We have 100 million shares outstanding, only 21 million free float today. It's going to move up to 35 million by the 1st of October. So it's very, very tight. The balance of the shares are held in escrow. Wesdome remained as a 30% shareholder of Goldshore, and they're a 30% shareholder because it's an investment for them. Is it strategic? It probably isn't. They are $1.5 billion market cap gold mining company with assets in Ontario and Quebec, but they're underground assets, and they're some of the highest grade underground assets in the world. And they run underground mines very well, and that's their sweet spot. That's what they have built their company around. So having Moss Lake was more of an investment opportunity for them, and they built it up and they built the land package up. It was more of an investment opportunity. Now they're going to be able to realize that investment opportunity by what Goldshore is going to do through the development curve. So they're sticky. They want to hold on to this stock to realize, if they took $50 million in cash today for their investment, that wouldn't really kind of excite their shareholders. But if they can do a multiple of that investment, that's meaningful. Even for $1.5 billion company, that's very meaningful. So they're there, they're alongside of us, and they're with us. The balance of the Goldshore shareholders are also locked up in escrow. 15% of those shares get released every 6 months for the next 3 years. We have just under $11 million in cash today, and we have no warrants outstanding. So we have a very, very tight cap structure. So the takeaway for today is quite simple. We have a really, really strong group of people we put together to drive this, because everyone believes in the size and scale of this project. They believe in the kind of the macro theory on the gold price, some more than others, but I tend to be a bit conservative from $1,800 to $2,200. But these are all guys with huge networks of people that we all collectively use. This is a large land package in a tier 1 jurisdiction, low risk jurisdiction in Ontario, but it is a large land package. And we are focused on a big program, a big drill program to get through 3 key deposits. And 2 months ago, I would have said, Moss Lake. Now I'm saying 3 key deposits, because we know that there's something we need to test at Hamlin. We know there's something we need to test at Coldstream and Iris. And when we get back to Moss Lake, it will be our focus. It will get the lion's share of the meters. But this just provides so much optionality for a potential copper spin out. We will take this company, through its exercises over the next 12 and 16 and 18 months. And during that period of time, we have a really, really tight share structure. So small spreads, as much volume as I can create awareness for, and a big campaign. I am in the market every day, talking to people, talking to investors, doing webinars, doing road shows, conferences, etc. I am trying to get the news out there. I'm trying to get the investment thesis out in the marketplace, because we've only been around since June, and that is the real story. So multiple takeaways here on investment opportunity, both on economics, on size, on scale, on where we think the gold price is going to be for the next period of time, and also where we are calibrated to our peers. So it's a perfect storm. I think it's a perfect storm for Goldshore investors to come in today and to watch and watch us as we execute, watch us as we deliver this company at the end of the day. So I want to thank everybody for their time. And David, I really appreciate giving me the opportunity to tell the story to all of the RBMG people.
Well, thank you, Brett. If you are interested in asking a question and are logged into the Zoom app or web platform, you can submit your question to us directly in the question module. We will now take a moment to develop the queue. Thank you, and we'll be back in a sec. Brett, we do have one question we'd like to address. At the end of this program, where do you see Goldshore going from here?
Yeah, I think there's a number of permutations that can evolve here, and again, I'm just giving my view. Does Goldshore look to develop this further through PFS? The market will tell, the share price will tell, but the market will tell us that, and we're prepared to do it. And we could go back to the market, and we have the skill sets to do it and the experience to do it. So I'm not fussed by that. But in my view, the value that gets created at this stage of development, there starts to be a small diminishing return as you get into study and as studies get into construction. That's just the reality. If you look at the history of junior gold mining companies, mid-tiers and majors, when a project comes through the pipeline, the curve goes up fast and then it starts to taper and it starts to lower. So in my view, I want to create, encapsulate, and liquefy that value at the right time for my shareholders, because I think it's the best approach. And if we can do that, we will be transactional. 18 months from now, sure, we'll be transactional. Do I want to get a second project into the portfolio? I absolutely do, because this is a start, execute, repeat type development pipeline, and we can do this, and we can do this again and again. Do we have the optionality now of maybe doing that with a copper spin out? Maybe, maybe. And I've started copper companies before. We can do this, but will I be looking in the market for similar type sizable and scalable projects in tier 1 jurisdictions? Sure, everyone is, but we have an advantage. We have an advantage with our team, our people, our execution ability, and the network of people who follow all of us because of our track record. I've been there, I've done this, I've made a lot of people a lot of money over the years, but it's not just me. It is everyone else on our team, whether that's the board, whether that's the Wesdome appointees. And we have 2 Wesdome appointees, Mike Michaud and Heather Laxton, who bring a completely awesome skill set to our board as well. But our advisory board, everybody has been there and done that, and that is the reputation that we will carry forward. So optionality on where we're going to go after 18 months. There are some permutations, but I think that's where what we're looking at this stage.
Okay. Since there are no more questions, I'd like to thank you, Brett, and thank everyone for joining today's webinar. Today's webinar recording will soon be made available on Goldshore's website. If you have any additional questions that have not been addressed on this webinar, please feel free to email us at goldshore@rbmilestone.com. Again, that's goldshore@rbmilestone.com. Thanks again, and you are now free to disconnect.